So today's webinar is actually something very, very interesting. This is the time that the whole world is seeing a lot of changes with so much happening just about everywhere, and especially in the world of Islamic finance. There's just so much going on, and the opportunities and the challenges which especially come with the IT sector and the Islamic world, especially in the UK, is something that our chairman, Dr. Ziyaad Mohamed, Professor Dr. Ziyaad Mohamed, will be talking about. So this is a very, very good learning opportunity for each and every one of us. Now, I'm going to take you very quickly through Edupro before I hand you over to Professor Saab. So let me start with this. First of all, Edupro, an awarding body, we are here for a very, very global purpose. We see the importance, every one of us sees the importance of actually having that relationship between education and the industry. And to actually integrate that is what we're all about. That's what Edupro is here to do. And we do that by establishing, by creating, by maintaining a framework which actually builds upon the industries that we serve. I will be talking a little bit about the qualifications that we offer, so we understand the industries that we're going to be talking about. We believe along those lines that this kind of a framework and this kind of a positioning that Edupro has gives rise to great global learning opportunities for everyone. It has to be flexible and it has to be quality oriented. That's where Edupro comes in. Our assessments, the way we develop our qualifications based on the industry sectors, the way we deliver it, the innovative ideas and strategies that we embed, and the professionalism that it creates globally. That's where Edupro makes a difference. And eventually our mission, the bottom line, the actual fruit is actually to empower all around us, the individuals, the institutions, for everyone to have a lifelong learning atmosphere. Okay, we're basically run with, our basic way of applying what we do is through what we call and it's these 6 C's that I'm going to keep admitting people come in. Okay, just for everyone joining in, I'm grateful if everyone has their mics muted. And then, so the way we actually conduct our practice is through the 6 C principles that we have. And what are those 6 C's? So we have that here. The way we conduct our business is with total integrity. And this is, in today's world, it might sound like all 6 of these are very professional practices, but to be very honest, we all know that these are basic Islamic principles of actually practicing. And that's what we're all about. So I'm going to start. We have the integrity part. We have how we take care, how we work, how we input, how the members communicate. What are the things that we look for? We are very particular. We are carrying a lot of due diligence in everything that we do. We're very particular about having the right skill sets. We want to make sure that education and everyone associated with Edupro are capable of delivering. We're compliant. We're compliant with all the regulations, with all the regulatory bodies that we work with. We work with numerous partners. Confidentiality, that is something that we're very, very particular about. And that's how we actually run our business. And the last principle that we have is the conflict of interest. Obviously, there's conflicts everywhere, but we want to make sure that we don't have a conflict of interest, or we can minimize. And so we're very particular about the disclosures that are made in the very initial part of actually doing our business. The qualifications that we offer, what I've spoken about so far is Edupro as an awarding body. And now a little bit on the qualification side that we offer qualifications from the level 3 to the level 7. And as you can see from my screen, you can see that most of our focus is actually towards Islamic finance, business qualifications, and communications itself. These are the different qualifications that we have. These have already been launched. They're all available. They can be, they can be registered through any centers, and they are at different level sizes. We have different credit sizes for the qualifications that we have, and that shows the depth and the timeline that we have for these qualifications. Each qualification that we have, as it builds up, the learning outcomes, the assessment criteria, very closely benchmarked to, very highly benchmarked is what I should say, to international standards. And but today's webinar is not about the depth of our qualifications. It's about the Islamic Fintech, which inshallah we will just get at immediately after this. So we are working, Edupro is connected, working with numerous partners across the board. I'm going to now hand this over to Professor Dr. Ziyaad Mohamed. Let me just stop my share. And Assistant Professor Dr. Ziyaad, if I could kindly ask you to kindly take over from here.
Thank you, Jazakumullah khair. Thank you very much, Brother Abid. I am going to launch my screen as well as we're about to start. Wading through several of the many windows that I have open. And is my screen visible?
Yes, it is. Thank you.
All right. Excellent. Thank you very much. Thank you very much. Assalamu alaikum wa rahmatullahi wa barakatuh. Bismillah ar-Rahman ar-Rahim. Alhamdulillah. Alhamdulillahi Rabbil Alameen. Wassalatu wassalamu ala Sayyidil Mursaleen. Sayyidina Muhammad. وعلى آله وأصحابه أجمعين أما بعد اللهم افتح علينا بحكمتك وانشر علينا برحمتك يا ذا الجلال والإكرام. It is a pleasure and an honor to be here. Thank you very much, Brother Abid Ishaq and the Edupro team. It is a pleasure to talk to you about a topic that I think from the UK perspective has already been handled very well. But perhaps there may be other opportunities, specific issues and challenges that we may need to overcome, and then maybe even want to replicate and transfer expertise that have been gained in the UK around this topic of fintech, financial technology. It's been the buzzword for the last 5 years at least, and over the last 3, it has gained significant prominence internationally, spurred on by pandemic. So because of pandemic, we've seen the rise of the gig economy and small service jobs and freelancing moving away from the medium to long-term or even permanent employment. So fintech has been an enabler to this new form of doing business. But particularly from an Islamic fintech perspective, we've seen significant developments internationally. So in a nutshell, I'm going to talk about Islamic fintech developments first. We will touch on the gift index for fintech, look at some of the progress made in Malaysia, and I'll tell you why we chose Malaysia here a bit later, and then focus on some of the opportunities available for Islamic fintech in the UK, and the challenges, of course, in implementation, and then the current practice as well, and then considering the ethical dilemma within future practices, and then we'll summarize. So hopefully not too long a session, but at least for the next 30 minutes or so, I'd love for you to just indulge me in the discussion around fintech. Please don't hesitate to ask any questions. You can put them in the chat box, and we will try to address them as best as possible. After the session, if the chairman, the moderator, Brother Abid, does give us permission, we may probably have some questions and answers live through the Zoom platform. So to begin with, Islamic Fintech, what's happening? What's happening globally? What's the progress like? Is it something that has actually been matching the progress conventionally? Well, we need to put things into perspective. Islamic Fintech represents less than 1% of global Fintech. Less than 1%, I'm talking about 0.8%. In fact, a year ago, 0.7%. So growing steadily, but it's still a tiny portion of global Fintech development. The majority of Fintech has been dominated by crowdfunding platforms. And those Islamic crowdfunding solutions right here in Malaysia, in the US, in the UK, internationally, this crowdfunding has been of different types. So you've got crowdfunding that's focused on donations, like Launch Good or Global Sadaqah. Or you've got crowdfunding that has been focused on investment solutions like Capital Boost or Ethos and Shekra. And then you've got crowdfunding solutions that really are supporting startups. They're not purely investment programs, but they are supporting startups like accelerators. And this is where you have the initial idea of startups launching through crowdfunding like Kiva, etc. So you've got the Islamic versions as well. As you can see, 44 funds or 44 crowdfunding platforms registered and raising funds through their platforms internationally. Now, if you look at the circle, and what we've done is all of the sources we've taken are from the latest Islamic Fintech reports, primarily from Dinar Standard. And you'd see that sukuk on Fintech are the least developed. Now, what's sukuk in Fintech? Firstly, it's the opportunity to provide or to access investment in institutional style investments like bonds. Of course, here we're talking about the Sharia-compliant version, the sukuk. And there have been very few initiatives that have focused on sukuk. One good example is Blossom out here in Indonesia that has used blockchain and sukuk to market through a digital platform. But even that was a very small window, a tiny window of total sukuk issuances. We've also had Ihsan Sukuk right here in Malaysia, and I'm speaking from Malaysia at the moment. And again, this was meant for retail investors. But as you see, this market on sukuk, and even you'll see later, Islamic capital markets and fintech is largely untapped. And there's a lot of opportunity there for the UK and for Europe at large. Digital asset solutions have gained significant ground. And here, they're still trying to overcome regulatory hurdles. And if you know what I'm talking about crypto assets, tokenization and offering tokens, Sharia-compliant tokens, that is, of platforms. And very few have been offered. There are quite a few in the pipeline that I'm aware of, have also been asked to review from a Sharia compliance perspective. But many of them either mimic current conventional options, whilst only one or two of them actually have a link towards real economy. And this is not a session on the legitimacy of Bitcoin or cryptos, etc. You can read some of the articles that we've prepared on the matter. But this is a new sector, and it's developing rapidly. And based on what's under the covers at the moment, I think that within the next year or two, you're going to see a plethora of Sharia-compliant digital assets from the NFT space, the crypto asset space, and even the broader decentralized or DeFi space. So there's a lot of potential that's coming out of this sector. But I think that the linkage towards real economy is still not there. Another major sector that has not really developed as expected is the social finance sector. Now, social finance, we're talking about zakat, sadaqah, we're talking about even cooperative takaful, and then tabarru' and other forms. So the reason I bring this up is because, you'll see only 6 initiatives have actually launched on the social finance side. But a lot of the hype, even from scholars with due respect, has been that fintech will be this elixir to financial inclusion or solve the issues of financial exclusion in Muslim majority countries, in poor Muslim countries throughout the OIC. And they've even gone to the extent of saying, well, digital assets or cryptocurrency will be the solution to financial inclusion, which just boggles my mind because I don't really see that strong link yet between cryptocurrency and financial inclusion for those that have not been able to enter the economic marketplace. And perhaps maybe later, if you ask a question, we can deal with that. But if you look at international experience or international practice, those that are investing in crypto, the poor, those that are seeking access, most of the investors in crypto right now, whether there's an argument, there is, of course, that argument of halal and haram around crypto, but those entering the space have the wealth, are generally well-heeled to enter the space, and they can afford to take the loss. As for the poor that have been excluded, they remain excluded without crypto or with crypto. So that has not really solved anything from a social finance perspective as yet. There's a lot of potential, untapped potential when it comes to social finance. And here, this is really in the movement of funds from wealthy nations to those that are in need. So from the UK into countries like Uganda or Malawi or Ethiopia in Africa. And these countries are in need. There are significant barriers to moving funds across, whereas using fintech solutions, crypto solutions perhaps, will grant access to funds in this way. So it's not perhaps the way in which financial inclusion has been perceived by some scholars, but it is actually a transfer of funds, a redistribution of sorts of wealth, as you might see, as what is the aim in Islamic social finance, especially the issues around zakat as well. Market size. Well, by 2020, the OIC-based Islamic fintech companies made up 0.72% of global fintech. So we around 0.8%, which is positive. It means there is a growth pattern that we're seeing here. But as you can quite well imagine, it's really very small still. Saudi Arabia is the largest Islamic fintech market, 17.9%, Iran 9.2%, and Malaysia at 3%. The top 5 markets represent 3/4 of all Islamic fintech. 3/4 of all Islamic fintech. And the market size was around $50 billion, and it's expected to be around $128 billion by 2025. But here's something about predictions in the fintech space. They're largely inaccurate, and they usually defy expectation. That means that you're looking at 150 to 200 billion, probably depending on different offshoots, and another new disruptor if it enters within the fintech space. And as you know, fintech is a disruptor as it stands, but even elements and components within fintech, like the DeFi space or the DAO, the dApp space, and even the metaverse itself, is a disruptor within the fintech space. So you can expect other offshoots within the next 5 years. It's not going to be stagnant, and therefore that may just catapult Islamic fintech to another whole market size. Gift Index. Well, the Gift Index was launched, first of all, in 2021, and it's a global Islamic fintech index to measure Islamic fintech development. We have something called the Islamic Finance Development Index, the IFDI, and now we have GIFT. GIFT represents 64 countries, of which the majority are Muslim countries. You have some Muslim minority countries. It's where Islamic finance is prevalent. They form part of the sample of the GIFT index. There are 32 indicators and 5 broad categories. And here they measure talent. That means what's the skills available in the market? What's the regulation like? Is it enabling enough? Are there strong governance criteria? But are they accepting of fintech solutions, or are they a barrier to entry? But then they also look at infrastructure. And this is an important point, and we've currently just done an exercise in Ethiopia. And this really concerns me, especially in the fintech space. We love to talk about fintech and how it promotes financial inclusion. But the fact is that many of the sub-Saharan countries still suffer from poor infrastructure. So poor infrastructure that you're talking about only 25% of Ethiopia having access to the internet. Now, if you understand this type of figure, you realize that fintech needs this lifeblood of telecommunications. Without that, how do you apply and access fintech? And then from that, you need skills and regulation and infrastructure. And if the market really has not embraced it as yet, which is the vast majority of sub-Saharan countries, then how can you actually claim that fintech is suddenly going to achieve a whole lot of financial inclusion? So infrastructure is very important, and UK, of course, has the major advantage of exceptionally strong infrastructure and regulation. The iFintech market and ecosystem in general is also another category, and then capital available is a major category. Now, as you can see, the top 20 countries in the GIFT index are led again by Malaysia. And I say again by Malaysia is because the Islamic Finance Development Index is led by Malaysia and has been since the inception. And the gap between Malaysia and the next country in the IFDI, Bahrain, is so significant. It's about 30 or 40 points. And then from Bahrain to the next, which is Saudi Arabia and then Pakistan, these countries, there's less than a 10-point difference for all the next 3 or 4. Now, you'll find that in fintech, it's not as wide a gap. Malaysia is 87 points far ahead. But then you've got Saudi Arabia, the UAE, Indonesia, but you'd see the UK featuring here. And it's interesting because the UK is a non-OIC country. It's a Muslim minority country, approximately 5 million Muslims in the UK, but it features in the top 5. And that is a testament to the success of Islamic fintech in the UK. In fact, I'd go to the extent of saying that this index is not actually that accurate because there are certain elements that are not taken into account. So this means that if we remove the Islamic finance ecosystem that exists in Malaysia, that does not exist in the UK, then immediately the UK could catapult up to the second level, and maybe even I would venture into the number 1 spot. And you'll see a bit later why I'm saying this. The UK, of course, does have a strong pool of talent in fintech, but they have regulatory enablement that far exceeds the Malaysian market at this stage. And they have an active Islamic fintech community, and it's really growing by leaps and bounds. So let's keep an eye on that GIFT index. And if the UK really wants to progress, they can use this as a measure to see how they fare against other Islamic finance nations internationally. Now, the reason why I'm mentioning Malaysia and we're bringing Malaysia up as a case study, brief case study for you, is the fact that it's number 1. As you've seen, it's number 1 in the GIFT index, it's number 1 in the IFDI, and it's number 1 because it has a holistic Islamic finance development and ecosystem. So what does that mean? It means that if the UK wants to be the biggest player or a bigger player in Islamic fintech, it needs to consider the pillars, what we call the pillars of Islamic finance that Malaysia has adopted. And those pillars include the Islamic banking market, which means it has a fair blend of windows, subsidiaries, and standalone, 16 in total. It has foreign and local banks. But then it has another pillar of takaful, which is again, conventional, meaning that you have windows, you have fully fledged, and it's a good balance of the insurance market and developing at leaps and bounds, focusing on different elements of mental health. It's focusing on COVID and subsidies. It's also looking at digital platforms and a purely online offering of takaful. Then it's got other elements, including the investment and capital market and asset management, and then another pillar of regulation, and then finally the pillar of social finance, which is very well developed in Malaysia, all bound together by a fintech enabler. So as you can see, because the pillars are so strong in the Malaysian Islamic finance market, it's very difficult to compete yet with the Malaysian market. But the Islamic fintech space is not as advanced as the United Kingdom and other countries. And this is because regulation plays a major role in Malaysia. Regulation basically really commands the development space. And the first step was the development of a sandbox and allowing 6 fintech companies and startups to play in the sandbox. And thereafter, more recently, offering 6 Islamic bank digital licenses. And in April, May, the first licenses were issued. Only 1 out of the 6 is Islamic, and we're going to talk about that just now. But as you can see, Malaysia is successful because it has good government support. It has support through government organizations like MDEC. My Digital Blueprint is a very clear roadmap of how fintech is going to roll out. Malaysia 5.0, another strategy, the digital financial inclusion strategy for the 40% lower income earners, for social entrepreneurs, for micro to nano enterprises going into the gig economy. All of that has a very clear roadmap. It has government support. It has government funding. And this really allows for Islamic fintech to progress. Probably within the next 2 to 3 years, you're going to see something substantial from the Malaysian market. But let's talk a little bit about the Islamic Digital Bank license. So a consortium of Aon emanating from Japan, Aon Credit Services, Aon Financial Service Company, and MoneyLion from Delaware in the US, they received the first Islamic Digital Bank license from the Ministry of Finance in Malaysia in May. But their assets will be limited to 3 billion ringgits. You can divide that by 5 for an average UK sterling amount. The minimum capitalization of 100 million ringgits, again, divide that by 5 of 20 million odd pounds is what's the requirement. And 5 conventional licenses were given. So there was a lot of competition around the issuance of the Islamic Digital Bank, and it's expected to be a game changer in reaching the broader community here. And you should remember that the Malaysian Islamic finance space is actually dominated by non-Muslims. So you've got 60% of Islamic banking customers being non-Muslim. Now that's a very important statistic because it's telling you that Islamic finance here in this country has moved away from marketing Sharia compliance. That's a given. Sharia compliance is a given. But it's marketing a value proposition, it's marketing an ethical base, and that's why it manages to draw crowds. Here, this is then an opportunity for the UK to look at Islamic fintech not as a niche of a niche market within this Muslim community, no, but looking at the value-based proposition that it can offer for the broader European and international community. So briefly, Islamic fintech in the UK, the current space, actually has a recent Islamic digital bank launch of Nomo, launched by the famous Bubian Bank Group, Islamic Banking Group. Wahid Invest bought Nia, and that's something that you can keep your eye on, another initiative. Izdihar is another platform focusing on SMEs and financing of SMEs. There are several other initiatives, and as you can see, all the challenger banks, you've got Algebra, you've got Kestrel as well, that's into the market. There are several players in the UK, but fintech primarily in the UK has not focused on social finance that strongly. And there's another player that has not been mentioned because it's not been launched as yet, but that's Baraka DeFi. Baraka DeFi is working on a very unique approach to monetization of data and social finance. So this will be something quite new for the fintech space internationally, from a Sharia-compliant fintech space internationally, and definitely the first of its kind for the UK as well. The UK does have the development of Waqfinity, or the Waqf digital platform, and there are other initiatives taking place in the UK, and there's a lot of scope as well. So what are some of the fintech opportunities internationally? And then we're going to hone in on the UK. So once again, while I take a sip of my coffee, don't hesitate to put in your questions in the chat. A snapshot of fintech opportunities internationally will show you that the green color highlights high opportunities and red not so much. I'm going to comment and let's interpret this a little bit as we go along for what it means for the UK. Number one, alternative financing opportunities tend to be very high internationally, particularly in the Southeast Asian region, the Middle East, North African region, GCC as well, and then for Europe and of course the UK primarily. So here, what is alternative financing? It's sources of business financing outside banks. It's looking at financial channels, systems and processes that run solutions, financial solutions, but not pure banking solutions. So there is a lot of opportunity for offering alternative financing, Sharia compliant or alternative financing here. In the next category, capital markets, you'll see that the research indicates there's not much opportunity for capital markets, but I'm going to go against that and say that doesn't really make good sense, because capital market solutions like offering sukuk and fintech, offering Islamic interbank instruments for liquidity using a digital platform, securities trading at the institutional level, looking in fact at what's being offered as the commodity platform, commodity Murabaha platform today, comes from the UK, and that's IGA and DDCAP solutions. These solutions come from Europe and the UK. So there is significant opportunity for fintech in the UK, particularly in the Islamic capital market space. That's really been untapped, unfortunately. Another opportunity in the Islamic capital market space is that of the securities trading at the institutional level. So a lot of this takes place in the back office through treasury units, but making this more mainstream through digital platforms, that's not available as yet in the UK, and particularly from the Sharia compliant perspective. The next category, and I'm going to highlight here deposits and lending, I'm going to call it what it's supposed to be, deposits and financing. Deposits and financing are the biggest opportunity across the major Muslim majority and minority regions, Southeast Asian, MENA, and Europe. And you can see primarily for the UK, there's highlighting the fact that we don't have sufficient deposits and financing solutions available to the market. Now, there are two other highlights, and I'm just going to bring that up quickly, as you will see, for raising funds and payment gateways. So for raising funds here, we're talking about private equity and VC solutions, venture capital solutions, using fintech as the access points, using fintech for analysis of projects and grading of projects, that has significant opportunity, especially in the UK and Europe. It doesn't have a high number, as you can see, there's just two, but I believe there's a lot more opportunity simply because the solutions have not been innovative enough on the Sharia compliance side from the VC space and the private equity space. And I want to talk for a minute about this in more detail. If you look at the spirit of Islamic finance, it really focuses on risk sharing. And a lot of the solutions that you see, whether from a financing perspective or an alternative finance perspective, they're really focused on debt-based solutions. And that doesn't really move Islamic finance into its overall maqasid objectives. So if we want to develop this socio-economic initiative of risk sharing, especially from the VC and the private equity sides, then we must be more innovative in grasping and developing opportunities where small to medium business enterprises can actually be graded, be analyzed electronically, and that analysis can then secure Sharia-compliant funding with a risk portfolio so that PSR or profit sharing ratio can be built in. There's a risk pricing, and that can be assessed from a Sharia-compliant assessment perspective. And I believe there's a lot of untapped innovation that could be used there, from artificial intelligence in grading companies, and then even offering that financing, and then onward monitoring and increasing the amount of capital expended to these type of companies. So there's a lot of potential around VCs, especially since the UK is seen as an offshore haven. It's seen as a financial market, a financial center, financial hub, especially for VCs and private equity. That can definitely be an achievement for the UK. From the wealth management side, well, let's finish the payment gateways here. Payment gateways, I'm not too fond of purely halal payment gateways. There are opportunities there, but really they tend to achieve just a matching of halal companies with halal finance or halal payments for clients. But really, a payment is generally agnostic. So talking about halal payments seems to be a bit of a conundrum, to be honest. When it comes to wealth management, yes, there's a lot of opportunity around robo-advisory, but not the current robo-advisory that we see. The existing robo-advisory is very much a checklist of answering basic questions and then having 3 portfolios provided to you as options. What we foresee as opportunity for robo-advisory is a deeper intelligence, a deeper learning of an investor's behavior, understanding an investor's risk appetite, not through a few questions, not through 5 questions, but analyzing the consumer behavior, analyzing previous historical investment behavior, assessing the expectations and the investment horizon in a much more AI-driven space. So existing robo-advisory is really simplistic. It just goes through a checklist and then advises you to select this. It doesn't take any rocket science, and you can program it on Excel. There's nothing much to that robo-advisory. But to provide really effective robo-advisory, that is severely lacking and missing, and the UK could step up in offering this as an opportunity. Web 3.0 and metaverse solutions are largely untapped. And here we're talking about moving into a completely blockchain environment where blockchain forms the basis and really is the seamless approach of all instruments and activities. Right now, the use cases for blockchain have been limited, but if you look at Web 3.0 and the current DeFi solutions and DAO and dApp solutions, you'll find that there's a lot of seamless blockchain application within offering basic opportunities and basic consumer products. At the metaverse level, if you've seen what the metaverse has as opportunities, then we're talking about property purchases, but we are also talking about property rentals, usages of virtual centers and hubs through metaverse, and paying for that using tokens and crypto. And that entire ecosystem of halal is vastly unexplored, and there's a lot of opportunity existing in that space. But I want to draw you to a broader impact-driven space. And here, social impact finance. There's a lot of opportunity that exists for Islamic fintech solutions that move away from just acting as distribution mechanisms, meaning accepting your donation and then forwarding it to an NGO. What we envisage, and something that we have worked on with some large institutions right here in Malaysia, are deeper analysis, AI analysis of projects based on the social impact that's required in that area. So, for example, in an area out in southern Pakistan, in Punjab, if you're looking at a city like Bahawalpur and the surrounding areas, there is a need for literacy, female literacy. You're looking at the access to clean water and electricity. So moving social finance into projects that are dedicated to developing those areas and what's needed in those areas, not simply handing over social funding that's really disconnected to the demands and needs of that area. And I'll give you a real example. And not too long ago, there was an earthquake that took place in Lombok in Indonesia. And having worked with the Red Cross, Red Crescent, they realized quickly that everyone was willing to give. Everyone, I mean, big countries, US, UK, and very large institutions, they all were ready to give charity. But what they gave was in kind, and they gave tents, and they gave blankets. But almost all of them gave the same equipment. So a mismanagement of logistics ends up stockpiling tools and contributions that are not needed for the area. So we are talking about a more efficient usage of social finance, depending on the impact, depending on the need in that area. When I say area, I'm not talking about country or region. I'm talking about a town of 10,000 people, uplifting them because of the reality of what's happening in that area at this time. Remember, 6 months from now, there's no drought, there's no flood, but right now there's a flood. So it's matching direct emergency needs with real social finance, and fintech solutions don't really offer that today. Developing the ecosystem and building the pillars, as we've mentioned in Malaysia, and mimicking some of those pillars and advancing those pillars within the UK environment, and then moving into ethical solutions. And I'm going to talk about that as a major challenge for Islamic fintech. There's a significant gap in fintech internationally, and it's the need for really ethical solutions. And I want you to just keep that at the back of your mind whilst we cover cognitive banking quickly. For the UK, I believe there's significant opportunity in cognitive or behavioral banking. Now, cognitive banking is a unique form of AI-driven banking. Simply speaking, you walk past a car dealership and you look inside and you decide to test drive a car. And as you're test driving the car, the notification pops up that you're good for financing the car you're driving through the following 3 options that the AI, the app is giving you without you having to request anything. So this cognitive or behavioral banking, of course you can opt in to the activity, is such that it monitors your behavior and acts as your personalized financial advisor. It's not far-fetched. It's already in the making. You're seeing chatbots dominating most corporate websites today. Well, talk about chatbot 2.0. Chatbot 2.0 is really a personal assistant, giving you unbiased advice based on your own behavior and risk and investment time horizon. So the question would be now, can we program that AI to integrate Sharia values inside its guidance and its suggestions? Not simply opting for or giving you an option for an Islamic bank, no, but really instilling Sharia values and ethical values within that process, moving away from a pure compliance into a Sharia-based spiritual value platform. Now let's talk about something that plagues fintech silently. Fintech, as a disruptor, came into the market with the promise that it would offer solutions that would be cheaper and broader and more personalized even. So broader and general, in one hand, meaning reaching a wider audience, but more personalized to what you require. And by that, they've marketed themselves as inherently more ethical than traditional banking. But as Forbes points out, the Lending Club was charged in 2018 because it falsely promised loans with no hidden fees, but it was charging fees. Revolut, a neobank, faced accusations of ad theft, fabricating data, money laundering loopholes, an exploitative workplace culture, even misplacing £70,000 in money transfers. And we can go on. Another example, which we should not forget, is Robinhood. Robinhood, and utilizing this this kind of utopia of investing $1 and winning, and I use the word very carefully, and winning $1 million based on a gambling initiative of stocks, and claiming that it was liberalizing or democratizing investment, when it was just really establishing a gambling platform, and more people ended up losing than gaining. So it's a zero-sum game when you look at these types of initiatives. And therefore, are these institutions or platforms really integrating ethics? Well, this is a challenge for Islamic Fintech in the UK. From three broad categories: compliance, maqasid, and data privacy. From a Sharia compliance perspective, the ethical dilemma is going to be for Sharia scholars to effectively understand what's going on in artificial intelligence and neobanks and Web 3.0 and the metaverse, and really become comfortable with the new ethical issues and be more dynamic in providing opinions that will guide towards a higher level of spirituality and closeness to Allah subhanahu wa ta'ala, and not simply something which is legally acceptable. So this means that Sharia scholars need a whole new skill set to effectively assess these fintech solutions. From a maqasid perspective, just think about it for a second. With such a large amount of Islamic fintech solutions offering debt finance, access to debt is now just tap ready. Aren't we moving away from the ethical and maqasidic dimensions and promoting a constant consumerist, materialist behavior? Really, we're not nudging. We are now, in fact, just shoving people into a materialist behavior. And is this what Islamic Fintech really wants to achieve? The other issue is data privacy. The data of Muslim behavior will now be traded as a commodity. Take a step back and think about that. With the onslaught against Muslim communities internationally, Muslims trying to integrate, Muslims trying to contribute, and providing a good value proposition, you still have, at the moment, the rise of the far right and the populist propaganda. And you see that right now in the US. You've seen that over 4 years of the US. You see that even in the UK, in Germany, and other countries. So this far right tendency of course, arising from several issues, a lot of baggage. This now exposes Muslim communities to additional scrutiny and surveillance. And by selling the data of Muslim activities on Islamic fintech platforms, are we making Muslim communities more susceptible to this, to the current, structure and surveillance of governments and other mercenaries, so unscrupulous actors? So this is something that we really need to ask ourselves, and how we can ensure privacy of anyone, Muslim or non-Muslim, in these platforms. I've talked a lot about the opportunities and the challenges. I'm going to sum up now on what we need to look forward to for Islamic fintech in the UK. First of all, Islamic fintech internationally is just an enabler. It's not a solution in itself. It's an enabler to the broader maqasidic approach of protection of wealth, building prosperity, and improving the standard of living, all while maintaining a high level of morals and ethics for everyone, for whatever persuasion, whatever ethnicity, whatever religious inclination. Islamic fintech has that responsibility and is that enabler. And it's supposed to promote that economic inclusion internationally. And again, that goes beyond any religious or ethnic divide. For the UK, Islamic fintech has been more successful than most leading Islamic finance nations. And that also means that the models that you've applied in the UK have the potential for further enhancement, development, and replication across other Muslim minority and majority countries. We've talked about Sharia compliance for Web 3.0 and the metaverse. And for the metaverse, it's broadly untapped. And we've said Sharia scholars need a new skill set if they want to effectively guide and supervise the developments in that space. But Islamic fintech has a role to play in providing broader ethical fintech solutions with effective value propositions for humanity. And this cannot be a product for a niche of a niche community. It must show its true value for the broader market. And that's the only time that Islamic fintech can really become mainstream. Access to cheap debt that Islamic fintech offers in the UK and other countries is really to the detriment and against the spirit of the Sharia. So there must be a careful balance on how this actually progresses. And here I'm talking about, and I'm personally involved in some of these platforms. So we are careful, but not careful enough on the buy now, pay later issues and consumer financing, and then refinancing of consumer debt. All of this just creates and exacerbates the debt problem and a link for increasing this materialism or consumerist culture. Therefore, I do implore you, if you want to pursue Islamic fintech in the UK or anywhere else, think about the spiritual dimension of what Islamic finance truly stands for and how it's expected to develop a better world. That's the only time we will see Islamic fintech really make a dynamic change, an effective change, and create a positive impact. Jazakumullah khair. I'll end it there. If there are any questions, please feel free. Barakallah feek. Assalamu alaikum wa rahmatullahi wa barakatuh.
Assalamu alaikum. I would like to ask a question, please. Basically, I wanted to know, don't you think there's a mismatch over here? That if the finance people really want to contribute in fintech, they don't have the technology know-how. And on the other hand, the technology people don't have the financial awareness. So unless you're working in a team, how can you individually contribute in this line?
Yeah, absolutely agreed. I mean, here, the fintech solutions offered today are collaborative efforts. The collaborative efforts, and they mean that, and we tell this to Islamic banks all the time, we say that if you expect to play in the fintech space and you expect to do it yourself, then know that you will be beaten very quickly by competitors that understand the market better than you. So it is a collaborative effort, and most of the fintech solutions you see coming up today are a collaboration between IT developers and finance specialists. And you'll see that throughout, whether it's here in Malaysia or Indonesia, or even in the Middle East or the UK. There is this partnership, and it's not done by IT developers developing a platform and then trying to market something fintech. It's a constant collaboration. Now, saying that, I want to point out one additional issue, and that is that from a pure education perspective, education at the university levels, and I'm coming from an academic background, from that perspective, it needs to be multidisciplinary. That means that a pure finance professional is not going to be marketable in the years to come. He needs to equip himself with fintech. And that's why universities like INCEIF integrate fintech studies within the master's and PhD curriculum, because it's no longer, super specialist. It's always a multidisciplinary. I hope that answers your question a little bit.
Yes, thank you. Just with regards to the educational institutes, I think the proper merger of finance and technology is not actually happening. I think it's more finance-based and maybe a 1-hour lecture on fintech. I mean, I don't think we're actually properly integrating it, be it when you're talking about master's level students who want to study fintech, or be it PhD students as well. So I think there is that gap for people who want to, which needs to be covered or something.
Yeah, no, I just said that. I agree with you. There is a massive gap. I can tell you there are a few universities that do it. I am lecturing at INCEIF, and it's not a 1-hour fintech lecture. It's integrated into our syllabus, whether we're talking about social finance or capital markets or banking practices. It's part of the syllabus. It can't be a 1-hour lecture any longer. It has to be, just par for the course. It has to be part of the instruments and the distribution channels and the manner in which they function. It's not, mutually exclusive any longer.
Thank you very much. Thank you.
Pleasure.
Jazakumullah khair, Dr. Ziyaad Mohamed. If there are any further questions, please do ask. If there are any that come up later, then you can always reach us at support@eduprouk.com. But if on this platform right now, if there's any other questions, please do go ahead and ask. And I specifically say that because it's not every day that we get hold of Dr. Ziyaad Mohamed. So if there is something, that would be nice.
Shukran. Prof. Kabir, assalamu alaikum wa rahmatullahi wa barakatuh.
Hayyakumullah. Jazakumullah. Since there is none, so inshallah I will close this webinar for today. Thank you very much, everyone, for taking out time and participating. Jazakumullah khair, Dr. Saab. You've been it's been a great learning. This last 1 hour has been exceptional. Allah subhanahu wa ta'ala bless and reward everyone. Thank you very much for joining us. Assalamu alaikum wa rahmatullahi wa barakatuh.
Wa alaikum assalam wa rahmatullahi wa barakatuh.